What's up, guys? Welcome to the Stock Society, where you can learn everything about stocks, forex, and crypto. We're gonna come on with our first YouTube video. I'm so excited. You all don't even understand the chat that we have already. It's been going crazy. We have about 30 people in there. It's a new chat. We used to have an old chat called The Journey, that had about 300 subscribers at one point in time. Then, the Stock Society was just, a new path, right? So, we're coming hard. All 2021, we're going to be investing in the stock market, crypto, forex market, all the financial markets where we can make the most money, the bang for a buck. And, I'm just excited. So let's go ahead and just get started. Today, I'm going to be teaching you all 5 things that you should know before and while investing in the stock market, right? So the first one is probably just the most important one. It's the most obvious one, just to have a good understanding, right? You have to understand how the stock market works for you to actually profit and make money and actually prosper, in the stock market. You know, um, a lot of people don't really understand, the meaning behind what a stock is, and that's perfectly fine. That's why you're here. That's why we're the Stock Society, right? But just to start it off, how a company actually gets a stock, which is kind of what stock is. A stock is shares of a company. It's the same things. They're interchangeable. It's just stock is a little bit more complex word. It's not explained as much by just shares of a company. It'd be so much easier if everyone said that, but the stock market can be a very technical place, especially with the terminology that people like to use. So just don't overcomplicate it, if you know what I mean. So like I was saying, basically a company gets their stock by going public. Basically at one point in time, a company is prospering. They're getting really really big, but it's private investors, right? Not everybody can actually invest in the company and have a part of a company or a piece of the company, right? So it goes public through IPO. IPO simply means initial public offering, which is their first offering to the public. Now, whenever I say the first offering to the public, like I just stated, there's investors that have already been, investing in the company. They already know the ins and outs of the company, but the company finally wants to go public. So either they can raise more money, they can get more, just get more credibility or almost or presence in the market, and just overall just prosper. Like most of the time, whenever companies go IPO or they have their first IPO, IPO, they do very well. So that's some of the advantages of actually going public. So they have a certain amount. Let's say that just company X, right? Let's say I own company X, and I want to go public, and I want to offer half of the percentage of the net worth of my company to the public. I want to keep 50% through those private investors, stuff like that, the founders, all that. We own 50%, but we're wanting to give 50% to the public. So we divide whatever that net worth is that we have remaining that we want to offer to the public. We cut those up into shares, kind of like a piece of pie. Let's say the 50% that I want to give to the public, I want to cut it into 10 pieces, right? I just want to cut it into 10, which is realistically it's gonna be a lot of shares, but let's just say we're cutting the pie into 10 pieces, and then we're gonna just section that off. So let's say the pie is cut into 10 pieces, right? And let's say that the 50% that I'm wanting to offer to the public is worth $10 million. That means that every piece of the pie, every share is worth $1 million, right? So you basically just, the company, the founders, all that, they just want to offer, pieces of the company to the public. They cut it in shares, and then they give it a price per share. And then, as an investor, you or me, well, as you, because I'm the owner of the company, you're going to go to a brokerage, stock brokerage, just simply a place where you can buy and share, buy and sell, the asset or the shares of the company, right? And you'll just go buy the shares, and then you finally own a share of the company. So if you buy a piece of my pie that I own, but I'm selling to you, you'll basically be buying, $1 million share, which is, really good. So that's just like the basic understanding of how, you know, the stock market actually works. A stock is literally just a piece or a share of the company. So that's one of the most important things that you really need to know. Just, you know, that the shares and everything, and then how you purchase it is through a stock brokerage. So you'll have to make a account through the stock brokerage, and then say, broker, I want to, basically your broker's the middleman through between you and the company. So between you and me, that the broker's in the middle, you're saying, I want to buy a share of his company for $1 million, and I'm saying that I want to sell it for $1 million. So, you know, that's how it works. So there goes number one. Understanding the market is one of the most important things, and spend the most time trying to understand the market, because I'm telling you, in the long run, it'll help so much. Personally, you know, I was studying for a really, really long time before I started investing, and then ever since, it's helped me so much. I didn't spend time losing a lot of money because I spent so much time learning how to not lose a lot of money, you know? So just that pre-preparation is called your due diligence. Your due diligence is the most important thing. So number two is discipline. You have to be disciplined in the market. So like I was just saying, you know, if you're trying to buy a piece of my share or a share of my company for $1 million, you know, you have to have like a certain type of discipline to not, either overbuy, oversell, get in the wrong time, get in just too early, too late. You know, it's just, you have to be really disciplined about how you're going to do it. So that means that you need to have some type of trading plan, some type of, just some type of process of how you're going to do it. And you have to stick with that process through the entirety of your investing period of investing in the stock market. You have to be literally just disciplined. Make sure you're disciplined. There can be stuff like greed that'll take over. You know, you've already made a certain amount of money, and then you're saying that you want to make double, and your goal, you've already hit your goal, you know? So it's just kind of like, you have to be really, really disciplined. I've seen a lot of people, even myself, like sometimes, you know, if I'm not disciplined, maybe, you know, I'm just kind of playing around in the market, like I've already made my daily goal or something like that, and then I try to over risk it. Sometimes you can like almost risk half of your daily goal just by trying to, go the extra yard, and, your trading plan doesn't actually call for it. So definitely be disciplined. Be really, really disciplined. I can't get that, I can't say that enough. Be really, really disciplined with how you do it. Make sure you're really strategic. Just another word. So with your discipline comes, that's number two. Number two is discipline. Number three, you're gonna need to be consistent. Consistency is one of the, it's almost there with understanding the market and being disciplined. Consistency is literally like you compounding an account, $100 a day. There's 5 trading days out of the week, times $100, that's $500. That's just consistency. But let's say that you're making $1,000 on the first day, you're losing $2,000 on the next day, making $3,000 on the next day. You're not being very consistent, because those is just the variant of how much you're actually making and losing every day is very wide. Consistency can be, I'm only trading at this time of the day, this time of the night. Consistency can also be, I don't trade this particular stock at this particular time or this particular date. Just consistency. Like, make sure you're consistent with your gains. Obviously, you don't want to be consistent with your losses, because you'll just be continuously losing money. So make sure you stick with something, and you get there. So whenever I say that, I'm not going to go too technical today, but let's say you have some type of indicator that you like to use, and it's always made you $1,000. It's always made you $1,000, right? But if you stick with that, and over like a couple years, just think about that. $1,000. It's just that one indicator that you see every time it happens. You get in. Whether you're buying or selling, you always get in whenever this indicator says this particular thing, and you're being consistent. You're not trading other indicators. You're not you're not just going haywire with your trading. Just any type of the day or any time of the day, stuff like that. You just want to be really, really consistent. I'm telling you, it'll make you go a really long way. I've seen some people, they've started trading, and then they find the thing that works the most. Let's say that the candlestick formation, bearish engulfing meaning it's going to go down. They sell every single time they see that, and every single time they make $1,000. Now, after they see that, they want to start trading, inverted head and shoulders, which is, kind of the opposite. It goes up instead of down. And now they're trying to trade like two candlestick formations whenever they've already found one that makes them a lot of money, So don't go too far away from what works. You only need to know one single thing. And, whether it's a pair, a Forex pair, a particular stock, a particular crypto, Bitcoin, whatever, you only need one. You only need one asset to make you a lot of money. If you know it like the, back of your hand, as some people say, that's all that matters. That's all you need. You don't need to trade everything in the world because it's not necessary. And in all honesty, it would probably lose you a lot of money, because every, whether it's a stock, whether it's a Forex pair, whether it's a crypto, everything moves very different. Not even very different in its own way. Everything moves in its own way. So, don't try to overdo it. Don't try to overdo it. Just keep it simple. So number 4, number 3 was you want to stay consistent. Number 4 is good. You're going to want to diversify. Now, whenever I say diversify, you just want, in stock terms, diversification literally just means that you're going to be buying stocks over, there's 11 different sectors in the stock market. The GICS, which is basically just a particular way of identifying particular companies in the stock market and kind of like grouping them together to see how well they perform over a period of time. So, it's kind of like indexes almost, kind of just to track performance. So whenever you diversify, you're basically protecting your account from major pullback. So like I was saying, diversification, you're basically just diversifying your account to avoid pullbacks in the market, because not every sector does bad whenever there's a bad market. Not every sector does good whenever there's a good market. But if you diversify, you can have, basically compounded growth over time, even though you have some losses and a lot of wins. So diversification is really important. Some of the major ones that you always want to do is, industrials, technology, retail sales, transportation, real estate, communications, stuff like that, right? Just make sure you diversify your account. It's always really important. Diversification does have its downfalls at particular times. For example, during COVID-19, diversification would have kind of hurt you in particular areas, but it would have helped you a lot if you would have only, if you would have not diversified as much across the 11 different sectors, and you would have only bought, like technology, technology stocks and stuff like that. But, if you were diversified a little bit more during COVID, and let's say you had, a lot of transportation stocks, your account wouldn't have been saw as much potential as it would have, or it wouldn't have had as much value as it should have, So diversification is very, very important. Make sure you always diversify, especially just know your market too. Let me say that. Know your market, because, like right now, diversification would help you a lot because we're at all-time highs. It protects your account through the long haul, so if you're investing, you're not really like a trader or something like that, diversification would take you a really, really long way. So definitely just purchase shares of, some of these, even dividend stocks, for example, just diversify your portfolio enough to where, it has that value that it should. Even though you might not be seeing the growth that it should, but you're seeing the value there. The value over time is a lot more important than the worth of, the present value, the dollar amount at that moment in time. Value is way more important, especially with investing. For example, your investing is long-term. So, even though a stock might be worth $2 today, in 5 years, it might be worth, $10, so that can make a lot of money, especially, if you're, have over 100 shares and it's going to, $10, $100, whatever. So that's number 4 is diversifying or diversification. That's really important to know. And then number five is risk to reward. This is a ratio, basically risk, reward, risk, reward. So why is this important, you might ask? It is really important because you always want to be, risking a lot less than what your potential reward would be, right? So let's say that, I'm trying to trade something, just, like a physical product. Let's say I'm trying to trade this for this, right? So let's say that I know that this costs more than this, right? This costs more than this. So, for example, I trade this for this. Let's say this is $1, and then I got this for, let's say, 50 cents, something like that. You're not risking too much because you know that this is worth a lot more than this. You own this and you're trying to trade it for this. Hopefully that's a good idea, or good analogy there. But it's kind of like risking $1 to make $10, something like that. Just because you know that over time, particular stock, forex, crypto, whatever you want to say it is, you know that there's growth there. You're not risking a lot, because if you're risking as much as you're willing to gain, you're going to be breaking even. And you can't really break even a lot in the stock market, because if you break even in the stock market, you're losing money because of something called spread. I'll talk about that in later videos, but you're basically losing money if you break even. So you always want to be going for, risk to reward ratios of, let's say, two or more, right? So let's say you buy a stock for $10. You buy a stock for $10, and let's say you're not gonna let it go anywhere past $5. If it hits $5, you're getting all the way out, right? You're getting all the way out. But if it hits $20, you're getting out as well, because you'll be doubling your money, and then if you're going back, you'll be, you're kind of, or let's not even say that. Let's say like $100, right? You buy it for $10, you're trying to go to $100, and then, if it hits $5, you're getting out. That's really, it's a hyperbole there, but, just the risk to reward, you're risking a lot less than what your reward would be. So that's really important. So those are 5 things that you just need to know in the stock market, right? The number 1 was understanding. Number 2 was discipline. Number 3 was consistency. Number 4 was diversification. And number 5 was risk to reward. I really like making this video. The Stock Society has been doing really, really well. We have a Telegram group chat. I'll put the link in the description below. If you want to join, you'll have to send me an email saying that you want to join. Put the link to my email and everything, my contact information in the description below. Hope you all really enjoyed the video. Hope you all learned something. I hope you all, take the first step to investing, or maybe even trading. You're trying to get, a little bit more into everything. But I just hope that this helped a lot. And I hope to see you for part 2, where we go a little bit more into technical analysis, especially within the stock market, the crypto and forex market. So I hope that helped. Peace out.